It does take us to our talk of the tape, finding opportunity in this market. Our headliner was doing just that a week ago when stocks were sharply lower. He called into closing bell last Monday and told us as much. Well, BlackRock's Rieder is back with us now. He's the firm's CIO of fixed income and the head of the global allocation team. It's good to have you back.
Thanks for having me.
You sat down and you said, we've been selling. I'm a seller.
Yeah.
I was very surprised to hear that based on what we talked about a week ago.
So I would say pruning, trimming. Listen, when you take, today the market rally on a softer PPI. If you actually look at that report, it was mixed, but we're moving in the right direction on inflation. But when you take a step back and think about it, you got an economy that's slowing. You're now pricing. I think we were S&P was 5180 or so when we were on last week. We're bumping up against 5,500 earnings. If you take the PE of the equity market of the S&P, it's 23.5. Tech is about 34. And even if you take off of forwards, you're pricing a lot. You've got Mideast, you've got a CPI report tomorrow, and people say, well, and you get a slowing economy, and people say, well, we got the Fed that's going to cut rates. We're pricing in the Fed. You're pricing in foreign change cuts for this year. You're pricing in down to a 3% funds rate next year. Anyway, the only point being, is it time to trim a bit? We've been on for a bunch talking about equities, going on equities. Equities are going to be higher over a year from now. That being said, I think these valuations have caught up with, and think about where volatility is down to versus where we were on the phone. When VIX was at 63, we're now under 20. So you can set up some structures now where you could buy some upside because volatility is down again, protect some downside. And I don't know. It's a pretty big move in a short period of time.
Yeah.
It's worth taking some chips off the table.
You shocked by the rebound? You sound like you are.
Particularly given the fact that, I was looking at, was it Bostic or some of the Fed statements. We still have to see. I think you're going to see a decent CPI report tomorrow. Mm-hmm. But I would say the convexity of that number now, after you got a softer PPI and after you're pricing in so much for the Fed, listen, if it weren't a good number, that wouldn't be a great thing in terms of the perspective of where the Fed is. So I am surprised we've moved as much as we have. I know, whether it's selling or buying some convexity today, it feels like a bit of a gift relative to where we were. I went to sleep last night and I was thinking a lot about the geopolitical, thinking about, gosh, what's going to happen? And now you come in today and you got S&P's up 80-something points. Pretty good.
I think it shocks most people relative to where we were when we had this conversation.
Totally.
A week ago, and how quickly we've come back is almost like nothing ever happened. This was this massive panic attack over a growth slowdown and this unwind of the carry trade. Is there more to come as it relates to that, do you think? Are you fearful of that?
I would say a couple of things that make me feel better about it. Part of why the equity market's doing what it's doing. You cleaned out a lot of the gearing, a lot of leverage positions to a couple of trades, Japan being a big part of it. Walking in on, or I trade before I walk in, but you look at where the Nikkei was coming in Monday morning, that's for a developed market, equity market to do what it's doing. And then you think about what sort of stimulated it. You had a weaker payroll report as the Fed behind the curve, and by the way, the geopolitical was there. So you think about where we are today versus that point. Maybe the news is a little better in some forms. Getting confirmation of PPI, but we know inflation's coming down. But gosh, I read a load of earnings reports. And if you said, earnings were pretty good because margins continue to be reasonably high. You go through this period, what companies do, you're able to keep margins up, but the top line revenue, particularly you think about consumer data, top line revenue was uninspiring. So listen, I think the economy's fine. Is it softening? It's softening.